Everyone, welcome to a brand new episode of the Outlier Podcast. I've got Alex with me today. Hi, Alex. Thank you for joining in. And how are you doing, sir?
Good afternoon. I'm doing really well. Thanks for having me.
Absolute pleasure, Alex. It's an absolute pleasure. We've been talking for a while. Obviously, Alex is really busy. Getting on his calendar was not easy because he's really busy doing a bunch of things at the credit unions. Let me give you a quick introduction of who Alex is. Alex is one of the EVPs at Sunward Credit Union. Now, if I talk about his responsibility, that's a laundry list, but I'll try to do a half decent job. So Alex leads retail, contact centers, digital technology, marketing. Alex, in case I've missed out something, please feel free to add. He's almost got 20 years, 2 decades of experience in financial services and credit unions, having spent the earlier half of his career with Bank of America, then moving to the credit union ecosystem and being with Sunward for almost close to 4 years. Alex, feel free to add, chip in wherever you think I might have missed. I'm sure I've missed a bunch of things with the amount of responsibilities you have, but feel free.
Yeah, well, as you know, in the credit union space, the scope, especially for executives, can be quite wide. So in addition to what you shared, I also have the lending functions that I'm responsible for, strategy, planning, our data and insights teams. I think that covers the majority of them, which, at the end of the day just means that my days are always interesting and full of a lot of adventure for sure. But you nailed it right. Half of my career has been spent on the banking side with Bank of America, which taught me a lot of, great things, especially about leadership. And the other half of my career has been on the not-for-profit side within credit unions, which I've absolutely adored and treasured.
Absolutely, Alex. So let's peel the onion and let's talk about your journey a bit. Alex, do you want to talk about your journey? How did you start? How did you end up in banking firstly? And then how did you end up in credit unions? If you could talk about that journey, that'll be intriguing.
Yeah, appreciate the question. Coming out of school, there was a graduate program through Bank of America for new college graduates that offered them the opportunity to start in the organization as what was called a leader associate program. And what that did was give you the opportunity to experience different parts of the business and then choose a line of business or function that you wanted to spend your career in. And so I went into that and I chose the retail track. And to be honest, the reason why I chose it is it's because everyone at that time was saying that that's the place that you can promote the fastest and you have the opportunity to make some of the most money. Being younger, I thought that was the place to be. Funny enough, as I really got into the retail side within Bank of America, that was around, 2006, 2007, as we led into the Great Recession and the housing crisis of that time. So it was a particularly challenging way to start my career, is what I would say. But got a chance to spend time in retail in a variety of different roles, leading markets and regions in different capacities. Towards the back end of my career with Bank of America, I had the chance to work on the operations side, working with the security team, with overseeing physical security, overseeing internal investigations and fraud for the western part of the United States. And there came this time at one point where I had a good friend of mine, his name's Steve Owen, as well as Brad Calhoun, who's a CEO as well for teachers. Steve Owen is the CEO for First Entertainment out of Southern California. And they're both Bank of America alum who I had known and trusted very, very much. And they said, hey, there's this opportunity to come work at a credit union. It's called First Tech. And, to be honest, my first inclination was, why would I want to go work at a credit union? Because that's where all the lazy people go to work. And the reason why I thought that was because working in retail, all of our low performers who left the organization, well, guess where they ended up usually working at was at one credit union or another. But of course, as you know, that was a fallacy in what I was thinking. The more I got to learn about what this not-for-profit cooperative stood for, the difference between banks and credit unions, and the type of impact I would be able to have at the scale that these organizations operated at, was just absolutely fascinating. And so about a year later from that first conversation, I made the jump, which was probably one of the scariest things professionally I've ever done, and had a chance to work at First Tech with a number of great leaders and really get immersed into the world of credit unions, the business of credit unions. And Yeah, that was an incredible start to my that part of my career that was within the credit union space. So post that, I had chances to work for a credit union out of Texas, TDECU. I worked with Bradigan at Teachers Federal Credit Union based out of New York, and then most recently working with Steph Sherrod here at Sunward Federal Credit Union, formerly Sandia Laboratory Federal Credit Union.
That's been quite an illustrious career. I think all of that had that same fallacy of for you, why do you work for a credit union? And for me, why do I consult for a credit union? Because these guys are not the ones I want to work for, right? Or work with. But then working with credit unions, I think the amount of one satisfaction I have right now, Alex, I never had ever in my career. I came from consulting, I came from Accenture, working for the larger banks and other Fortune 500 companies. But this stint, I would say definitely for the last 3 years has been the best. So I'm glad that you echo the same feeling because we've seen the outside world. We've come from outside banks and larger corporations to credit unions. And that's there. Interesting.
Yeah. Just to add on to what you're saying, I agree too. And I think there's some real differences between banks and credit unions. I actually believe that it's easier to work at a bank. And the reason for it is because it's really clear on what's important, who's important, what the mandate is, if you will. And it's pretty singular or finite. And I think working at a cooperative or a credit union is a fancy way of saying that you have a group of shared stakeholders that you're responsible for. And instead of just one group like shareholders that you're working with, you might have members or prospects or people in the community or employees or the organization as an entity that you are balancing out the operations of the business with all of these stakeholders. And so I think it's harder to meet the needs of multiple stakeholders than just having to focus on one. So it's harder, but you know what? I certainly have no issues looking at myself in the mirror every morning when I get up for work.
That's $1 billion statement you already made, Alex, that looking in the mirror every single morning has become easier while coming to this side of the world, for sure. Yeah. So continuation of that question, Alex, after Bank of America, you spent almost more than a decade in credit unions. I want to ask you, in your experience, what is the plain vanilla difference that you've seen working with credit unions and banks? And if you want to, maybe highlight a couple of those pointers, that would be great.
Yeah, I think, from a bank perspective, clearly shareholders are the number one priority in the bank's list of priorities, if you will. I think you would see that they would also talk about employees or what they call associates. And they might talk about communities as well too, but it's pretty important. EPS, the bank's financial positioning and how it creates a return back for shareholders is the number one priority. And I think that's different in that, yes, that the customer is the shareholder in the model of credit unions. We call them members. And that, yes, the value you return to them is important, but it's just not about financial value. And that's, I think, where the biggest difference lies. At the inception of credit unions back in the mid 1800s, the idea was to provide access to credit and expertise that people, your average person, could not have access to. And it really served that purpose for a number of years. And it wasn't probably until the last 40 or 50 years where that had really transformed into being more of a transactional powerhouse, if you will, right? Standard teller of taking in deposits or giving withdrawals or cashing checks kind of took form. And so I'm a true believer that credit unions that are living up to their mandate or charter, that are trying to live up to this whole stereotyped word of creating financial wellness or health, is that they're doing that. They're really helping people have access to expertise and credit that they wouldn't be able to get at the same level or with the same unbiased approach as maybe someone from a bank or from another institution.
I'm sure, yeah. Those are the profound differences. Yeah, that makes sense. Let me focus or maybe turn that around. Differentiation. Right? Essentially, there's a cookie cutter word that I hear from all credit unions. I eat, live, breathe credit unions, meet 30 of them every month. We talk about member experience, right? Suddenly, strangely, when I ask people, how do you measure it? Half of the people can't measure member experience. It's very sad. So my question is across being member focused, right? So most credit unions say that they're member focused. So it's not differentiate, everyone is. But what different are you trying to do at Sunward? Because I know you guys is at a huge rebranding. You guys almost changing your charter. So what are you trying to do to help people accomplish this?
Yeah. Well, I think just in general, from a philosophy perspective, having a clear strategy is important to be able to create that differentiation. I think too often there's a graveyard of financial institutions, including credit unions, that are trying to be everything to everyone.
That's the
And
biggest problem.
it just does not work. There's no one that has been able to show me that works well. And so when about 4 years ago, or over 4 years ago, when Steph Sherrod, our president and CEO, arrived here, one of the first things she tackled in alignment with our board of directors was, what is Sunward's strategy into the future? The organization was really proud of what it had done the previous 74 years, and it wanted to figure out what it was going to do in the next 74 years. And that's where we landed on our strategy, which we branded Vision 2030, are a series of steps that we take between now and 2035 that help to create small to very large moments of differentiation. So if you take a look at what we did in rebranding and renaming the organization, it was completely aligned to Vision 2035. It was intentional in trying to expand the affinity of our organization, our brand, with the marketplace, with a specific subset of the marketplace that we wanted to retain and acquire. And it worked. If you go and look at what we've done from a member acquisition perspective or from a lending growth perspective, we're in the top quartile of any peer data that you could look at. And so that's one example of our strategy clearly defining where we show up a little bit differently. For Sunward, we don't have a nationally scaled plan. At our scale and size, even if we were to be 2 or 3 times as big as we are, I think you got to realize the financial realities of what you can do and what you're capable of, which you can't take everything on at once. It's almost like trying to be everything to everyone. And so we know that the Southwest United States doesn't have a clear leader from a financial services perspective, somebody that really stands out and is able to serve that part of the country in a differentiated way. We think that marketplace long term is where we're going to continue to be, we're going to continue to expand in, we're going to continue to thrive in. As far as from a product perspective, how we're going to do that, you can think of the standard deposit products that we need on one side of the balance sheet to drive that, and that of course consumers need. And then from a lending perspective, those full suite of products. But we really see, especially in the Southwest, this problem to solve around housing, that we want to create some differentiation. And that's not only in the products like around consumer mortgage that you might think of. We have one of the highest performing business services and commercial lending portfolios in the industry. That was developed by people like Andrew Janes, who recently retired, Dan Cover, Casey Bresnahan, that work here at the credit union. And they've really developed this front end of housing that a lot of credit unions don't get to impact. That could be the purchasing of land, the developing of land, the ability to be able to break up lots, develop homes, and then sell them and provide those mortgages and other programs, et cetera, that help kind of more downstream. But we think this holistic view, or this full stream area of focus on housing, from dirt to the actual refinance or resale of a home, is where we can show up and not only create affordability, but become an economic engine, a driver for communities, and making sure that full stream of impact is continuing to progress forward, it's healthy, and it's strong. So that's another element of our strategy, this Vision 2035 that I keep referring to, that is really creating differentiation for Sunward externally, and also, for our employees internally. As much as we look like we're advancing and changing to the outside world, there's just as much, if not twice as much, on the inside from a talent and a culture perspective that we're doing to continue to transform the organization.
I mean, I'm glad that you're thinking about a specific value differentiator, because again, you cannot, I think that's the biggest mistake which CFIs do now, that maybe a Sunward can have a credit card. On the other hand, a Citi or a Chase also has a credit card. So what is the value differentiator? I mean, identifying that niche, identifying that segment, and what do you stand for? That's the basic difference. I think unless we do that, it's not easy to survive, because both of us have come from banks. I mean, the amount of resources that they have at their disposal, it's not easy for us to even compete is a wrong word. I mean, even to go and stand in front of them. I mean, There's a number that I quote every time. JPMorgan Chase spends $15 billion every year on technology. That's the technology budget. That's not even the asset size of one of our largest top 20 credit unions. So we think we can improve experiences and that'll be it. That's not really a thing. So completely other.
I agree. And I think, to your point too, I know that a lot of people talk about member experience and how they're differentiating that within our industry and within the financial services space. And I think we believe in member experience being at the forefront of what we do. It's one of our values. One of our 4 values is putting members first. But in my opinion, going back to how do we do that as a credit union, I think is a controversial bar that's different for each person. If I ask you what you believe it means to put members first, your definition is going to be different than what I say inherently, because we're not aligned on maybe what that is. And that's different from the credit union down the street or the credit union across the country or the bank down the road. And the differentiation is so wide. I use the analogy of someone thinks that the bar is like McDonald's standard, and some people think the standard is like 11 Madison Park, if you read the book Unreasonable Hospitality, right? And so I think the first thing to do is to recognize as an organization and face the brutal facts around where are you in the reality of that? Because you are somewhere, one way or the other, right? I heard a good quote the other day. I think it was from a former founder of Netscape. He said, if we're going to go with the facts, he said, if there's data, let's go with the data. Make sure I get this right. And he goes, if there are opinions, let's go with my opinion. And so I think getting to the facts around where is that bar and the actual experience you provide, that's one step. The second step is, where do you want to be? You may want to be at McDonald's level. You may want to be at 11 Madison Park level, or you may want to be in somewhere in between. And I think that's where you need to really clearly identify, okay, what's the journey between the current existing state that you're in and what you really want to be? Because as much as you tout how important it is to you, or as much as you tout that you believe that you're at a certain level or better than, the bank down the street, the reality is that the consumer, the member, the way they experience you, that's the facts, that's the data, that's the truth. And so the quicker we can go and recognize that, I think the quicker we get to the ability to really set ourselves apart or to be what we're, touting ourselves to be.
Absolutely. I mean, the quote that you talked about data and opinion, I'm a data scientist, right? So I use this quote almost every alternately till 5 years back, when people were still questioning the need for data scientists before AI actually became a thing. I still remember this is very relevant. Right?
Yes.
Your role at Sunward, right? I mean, you told us that you lead marketing retail on one side, then lending, contact center, digital, almost pretty much the entire credit union apart from risk and CFO, right? So my question is, how do you connect all the pieces together? Because it's a lot. I mean, anything member facing to technology, it's a lot. Member facing to employee facing, almost to run the entire shop. So how do you connect those, and for the lack of better words, how do you still remain sane?
Yeah, there's a few things. I think the first thing goes back to this. You're going to get tired of me saying Vision 2035, but having a clear strategy provides a map that you can overlay on what you're doing and what the priority is. And that broader vision and the longer term roadmaps we have associated with that help to inform annually where we're spending time. And so usually it's not about figuring out what we need to do, it's about how much we can do, which I think is a better problem to have than trying to figure out what to do. And so the strategy helps to inform and align these variety of groups that I get to work with, along with, our chief people officer, our chief risk officer, and our chief financial officer. In addition to that, I think the second thing is the leaders themselves. I get to work with people like Whitney, who's our chief growth officer. I don't know if you've had a chance to have met Whitney before, or Matthew Reedy, who's our chief experience officer, our head of technology, Zach Hill, our head of lending, Jamie Aguilar. These people are just a few folks that I get to work with every day that have just this deep expertise around their functional areas. And one of their superpowers is being able to understand strategically, here's what we are trying to do. Here's how we translate that into the work we do on a daily basis. And so I really count on those folks in being another set of eyes and ears that are carrying a torch and championing a unified vision together, and that are bringing those pieces together. And, as an organization, we find ourselves not trying to figure out how we say yes to more things. It really is trying to figure out how to say no to more things. And I count on those leaders on being the first to say, yeah, we can't do that, right? We don't have the time or capacity, scale or money or whatever the case might be, the resources to be able to do that. The leaders are the second. And the third is from a talent and culture perspective, which is a strategic element within Vision 2035 is talent and culture. It's that plays close to the leadership aspect, but it's bigger than that because I think in a culture where you're transforming and you're continuing to accelerate and progress at the pace that Sunward is, not everybody is built for that, right? Not everybody is built to fly the plane and change the engines at the same time. And so ensuring that you have the right caliber of people, so the people that know how to do the things you're wanting to do, but also culturally are comfortable in operating in a space that's more complicated than your average financial institution, right? And so I think those three things combined, clear strategy, great leadership, and good talent and culture is what keeps all of these multiple, departments, teams, functional responsibilities humming together.
Sure. In the interest of time, couple of more questions, Alex. One is, I'm a huge fan of Chime. Sorry, I'm a huge fan of Chime because of the experience, right? I opened an account. I remember, I think it took me 2 minutes, less than 2 minutes to just open an account, and it took like I think 24 hours or 40 hours to get the debit card shipped, right? Like really fast. So if someone asks you, right, Alex, why should I join Sunward and not a Chase or a Chime? So I know it's a controversial question, but let me ask you, you being at the center stage, what would your answer be?
Yeah, I think you're right in that scale matters, and some of the investments that fintechs make, and also that Jamie Dimon's making at Chase or Brian Moynihan's making at Bank of America, are large. They're huge. You can't keep up with it. If there's anyone out there saying, I'm going to compete with the digital experiences of Bank of America, I would really want to understand that because that would be epic to do it with the amount of money that, your average credit union has. I think that though I love analogies, and I'm sorry, I love food. So I always use analogies of restaurants. So I look at like a taco shop because tacos are my favorite food. I go to my favorite taco shop here in Albuquerque, and it's a small local mom and pop shop, one location kind of shop. But if you were to think about who their competitors are, even though that's my favorite taco shop, you might think that their competitors are places like Taco Bell or Taco Cabana or, insert the list of chains out there that are at scale, right? That are taking pieces of the market here in Albuquerque, if you think of it from a business perspective. But, I'll tell you, my favorite taco place does not have an app. It doesn't have a digital experience whatsoever. And it wasn't until about 2 months ago they finally are using another channel, which is the delivery service through Uber Eats or DoorDash or what have you. And so I think this comes back to who are the consumers that you're targeting and focused in on? And what are their needs that they have, both from a product perspective, but also from a channel delivery perspective? And then I think it's about carving out what pieces of that can you really own as an organization, and at the very least, get to par with what other financial institutions are doing. And I think sometimes we overcomplicate that we're trying to solve or boil the ocean around these digital capabilities. But I'll use the example of acquisition, right? You explained something very simple. In 3 minutes or less, I was able to open up my account with Chime and get approved. And within 48 hours, I received plastic in the mail. Right?
Yeah.
Any credit union today can do that. And it's not about the technology or the capability. It's about us and what we're willing to take the risk on, right? Because that is a risky to accept in 3 days to get you plastic. I'm sorry, to accept in 3 hours and to get you plastic in 48 hours creates some risk from a fraud perspective. And there's been some credit unions that have been burned pretty heavily from a fraud perspective. And so I think we can meet those capabilities. I think we need to make sure that fits the type of consumer we're trying to retain and acquire. And then I think we need to make sure we're prioritizing investing in and aligning on the risk associated with that to make sure that comes true. Here at Sunward, we use a platform. We call it SunPoint, and it's new. It's accelerated our ability to open new memberships. But remember, this is for folks in the Southwest. It's for a subsegment
Yeah.
of consumers that we're looking to acquire and retain. And so the requirements might be different for someone here in New Mexico than for someone in New York City or in San Francisco or what have you.
Sure. I see. So, Alex, one last question, right? In terms of your growth strategy, I mean, we know that you just opened up in Colorado. You're just getting some branches out there in New Mexico. You're expanding even in the brick and mortar format, right? So, what's your strategy? I mean, where are you going with this, and why are you expanding branches? How is your balance of digital versus branches spanning across? Because I'm a huge fan of you need both branches and digital. And digital is not the only solution. You need both of them, but I want to hear from you. What is the strategy?
Yeah, I think that, the cost of acquisition from a digital perspective used to be touted that it was cheaper than having what I would determine to be more of a, physical or analog channel or priority of acquisition. And I don't know if that's true anymore. If you take a look at from a digital marketing perspective, the cost to acquire has shot up tremendously over the last decade. And so it'd be interesting to see some analysis. I know we're doing some analysis right now on what really is cheaper at the end of the day, especially here in the Southwest. But strategically, I think I shared Vision 2035. We've said the Southwest is the place that we call home and that will continue to grow and expand in. In New Mexico, that's part of our strategy is continuing to expand. We believe that, yes, having digital capabilities, the ability to acquire digitally is something we'll pursue and invest in. But we also believe physical locations are important, not only from a servicing a problem or servicing perspective or a sales perspective, but they're a huge brand awareness tool that we use within the communities that we're in. And so we're placing branches in places that make sense for people to know that not only we're in the community, but they're somewhere that they can access physically if they I guess sometimes people are looking for that security blanket to have a physical location to be able to go to if all else fails, right? And so New Mexico will continue to expand in. We've entered into Colorado through Durango, and we consider that the Four Corners region. So that's Farmington, which is in New Mexico, that crosses just slightly over the border by about 30 minutes into Durango. And we'll continue to expand that market, invest in that market. That branch is doing very, very well as the Four Corners area. We're continuing to do very, very well in. And we're evaluating right now other parts of the Southwest that we want to potentially enter into and invest in. And so I think we'll get that information. We'll prioritize what that list is. What it will also come down to is, well, how many fronts do we want to have, if you will, from an expansion perspective? Because every time you enter a new market, there's a whole different set of requirements, a whole other set of investments that need to be made. Because if you're really wanting to be successful there, you have to understand, adopt, and integrate into the community, similar to what we've done here in Albuquerque in New Mexico. Yeah. And so we're trying to make sure we're not growing too fast in multiple markets, because we feel like there's a risk of not doing it right if you go too fast.
This was very well taken, Alex. I mean, that's possibly the answer I was expecting, that it's not black and white, it's gray now. But we go and still keep our tabs open and look at the acquisition cost for both digital and direct mail, as well as typical branches. And I mean, my experience of working with 30 plus credit unions doing marketing for living, I would say yes, that's a very right strategy that you're doing. And Alex, I wish you guys all the best in your journey, and excited to see where you guys end up.
Yeah, likewise. I appreciate the opportunity to chat with you today. It's been an awesome experience. Thank you.
Absolutely. Thank you.